Hey everybody, so it's Streak here, and I'm going to talk about why I'm extremely bullish on Uber long term. So Uber's been really dealing with a lot of turbulence lately in the news. The company is not very profitable. They're burning through cash. So I just want to quickly show you guys a couple highlights from the Q3 report. So one of the nice things about quarterly report, guys, is that they really provide a lot of information that you won't really hear about in a lot of the CNBC articles and things like that, because it's taken directly from the CEO. So a lot of the information really will tell you the long-term trajectory of a company. So so let's just take a quick look at it. So one of the things that was eye-popping to me is that the revenue for last quarter was 3.8 billion and 30% year over year. So let's take a look at this, guys. This company just IPO'd earlier in 2019, and it is already generating revenues of 3.8 billion. Now this is before people are comfortable. A lot of people aren't comfortable with ride sharing. Smartphone use is not ubiquitous. Many people in developing countries, other places like that, they don't have smartphones. Okay, this is also before the age of self-driving vehicles. That's exactly where we're moving to, because you guys have seen a lot of the reports about problems with the Uber drivers and things like that. Having self-driving cars completely eliminate that problem, and you don't have to pay the drivers anything. So this is just like a win-win. But we're not there yet, you know. So you gotta like put your mindset like into the future where everything's going, right? Before, you know, maybe 20 years ago, if you had a smartphone, everybody thought you were crazy. Now, if you don't have a smartphone, everyone thinks you're crazy. So that's kind of how the technology changes, and people at first they resist something, and then I'm pretty sure that in the future people will be very comfortable riding in a car with no driver. It'll just be not a big deal. So I just want everybody to keep that in mind. So now let's take a look at something. See, so the CEO Dara Khosrowshahi, right, said our results this quarter decisively demonstrate the growing profitability of our ride segment. Okay. Rides adjusted EBITDA is up 52% year over year, now more than covers our corporate overhead. So boom, that's a huge landmark right there, because now they're covering the overhead. So that means that we're on the road to profitability. I mean, at the end of the day, people said the same thing about Amazon. They said the same thing about Facebook. You know, the companies that are getting people's attention, they're going to be able to figure out a way to turn a profit. You know, it's all about market share. So as these companies get more and more market share, they're able to figure out a way to reach profitability. I mean, once you have people using it, you know, all you have to do is figure out how to shift that into more profits. And once again, remember now, the money is made in recurring customers. So once you get one person to use Uber, let's say they use Uber for the next 5 to 10 years, that person is going to continually be booking over and over again. And Uber will be able to raise their prices as inflation goes on. And then the money that they spent to acquire that customer, whether it's through like an advertisement or something like that, or a free promo, they no longer have to pay that stuff. So Uber for me is one of those long term type of companies. So let's take a look at some of the highlights, right? So gross bookings 3.7 billion to 16 billion dollars. I mean, the growth in this company is just insane. And you know, myself included, I use ride sharing all the time, and when I look at my monthly bills and everything like that, I spend a lot of money on rideshare, and that's the trend we're going to. You know, car sales are down. Companies like Ford, General Motors, they're laying off staff because people are moving to the city, and when you move into the city, if you own a car, you have to pay for it. You have to pay for insurance, maintenance. Sometimes you have a car note. Sometimes you have to pay for parking. So people are just figuring, hey, it's just much easier to use rideshare. You know, I'm in the city. You know, I can just rent a car exactly when I need it. I don't have to own a car. So those are just some of the key things that I wanted to show you guys. And then some of the numbers here are just really impressive. So if we look at the quarterly numbers, right, 10 billion, right, in 2018. That's 2018 Q3. Now 2019 Q3. 12 billion, right? They've been able to increase the bookings, but over $2 billion in just 1 year, and the actual change in gross bookings across all of their apps is almost up to 3 billion. I mean, the growth in this company is just insane. And I love about Uber is that they're already diversified. So while most companies just would have focused on rides, Uber already has eats in. And this kind of covers the basics, right? You got to get somewhere and you have to eat something. So I just think Uber is just in an excellent place. And then some other things I really noticed. If you look at this, grew customer loyalty programs to 20 million subscribers. 20 million global subscribers 6 months after launch. They've already got people in rewards programs. So once the people get into the Uber rewards, they're going to stay there because they're getting something back. It's like kind of this customer retaining model that will keep people using their app over and over again, right? If you have all these rewards with Uber, you're not going to just like delete the app and start using Lyft. You know what I mean? Unless something horrible happens to you. And they're kind of working on that because, you know, the whole ride sharing thing is still new and people are still, you know, adjusting to get into a car with someone that's not like an actual taxi driver or something like that. So those are really the points that really jumped out to me on the Q3 report. So then what I also want to show you guys is I want to go into Robinhood real quick, and I just want to show you guys kind of what we're doing in terms of the price here. So I click on the 1 year chart. As we can see, you know, the stock's getting crushed. And this often happens with a lot of IPOs. They get really beaten down because the IPOs, it has so many people. Everyone has to get a cut, right? The investment banks have to get a cut. You know, the founders have to get a cut. And everybody's ranting and raving about how the co-founder, Travis Kalanick, is selling shares. So obviously, you know, you don't want to see founders, things like that, selling shares. But let's just take a look at how many shares he's actually selling. So let's just go to NASDAQ and type in, you can just search for it on Google or go to NASDAQ.com. You go to Insider. So as we're looking at Insider, I see that, you know, a couple weeks ago, he sold off a bunch of shares. But he stopped. He stopped selling shares, and he still owns 28 million shares. So I don't understand what the big deal is. The guy still owns a ton of shares. It's perfectly normal for someone to want to divest, take some of the money off the table, put it somewhere else, you know. Maybe put it in cash if he thinks the stock's going to go even lower. He can buy it back later. Or maybe he just wants to diversify. But the fact of the matter is he still owns 28 million shares. He's not dumping his entire stake. So I just don't think that's a good reason to just avoid a company that's going to be up there with in the likes of Google, Amazon, Apple in terms of, you know, brand recognition and in terms of consumer loyalty. So I also, guys, what a lot of people may have missed is that on November 18th, the CEO himself bought 250,000 shares at $26.75. The CEO himself, he owns 1.5 million shares. So guys, anytime a CEO is buying that many shares, that is an extremely bullish signal. I've seen it time and time again. When the CEO buys, these stocks usually go on quite a bullish run for a long time, meaning the price continues to increase quite a bit over the long term. One of the best examples of this was JCPenney. It's actually, I believe, the CEO. Okay, so the CEO of JCP, I forgot, Saltall, right? The stock was trading at, like, I believe it was around 57 to 60 cents, something like that. It was beaten down, right? It was in, you know, almost getting delisted from the New York Stock Exchange. Everyone thought JCPenney was going to go bankrupt, yada yada yada. Turns out she ended up buying quite a few shares on the open market. I can actually show you guys. Okay, so I wanted to actually show you guys exactly when this happened with JCPenney. Now, I know JCPenney is a different company from Uber, but I just want you guys to really see the effect of how bullish it is when the CEO, maybe not, you know, like the chief marketing or the CTO or someone like that, but especially the CEO. So Jill Soltau, on August 26, 2019, she bought direct. So it wasn't stock options. It wasn't like she had some options and then she exercised them. This was, you know, over the market, just like you and me, right? She just bought it over the open market. She picked up 500,000 shares at 56 cents. And also, people on the board of directors, they bought as well. You got another director here. Basically, everyone bought it. Everybody on the board of directors bought it at 56 cents. Now the stock is doubled, right? It's doubled in about 4 months. So the insider buying is extremely good sign, because who else would know more about the company than the CEO, than the board of directors, right? Nobody knows more about it than those people. So just one of the reasons why I really like Uber. It's really kind of hard to actually predict the exact numbers that we're going to see from Uber, because like I said earlier, this is just a completely new industry that basically Uber has basically invented, right? I mean, you know, food delivery, driverless cars, ride sharing. These are kind of all the transitional phase. So right now, as you're witnessing, we're transitioning into a new era. So the old era where you had things like, gasoline cars, we're transitioning to electric cars. In the past, you hailed a taxi. Now you use your smartphone. In the past, if you wanted to go get some food, you went out to eat. Now you have food delivered. So I just really like these transitional companies. These companies that people kind of are always hating on because they can't see the future. They can't see how things are transitioning. So I wouldn't be surprised if Uber is one of the biggest companies in the world in the future. It just has everything. It just ticks off all those boxes. It's easy to spell. It's easy to pronounce. It's easy to remember. It's short. You need it. You need to get around. You need to eat. It provides all of those basic needs that aren't going to go away. Whereas, a company, like Facebook is a great company, but who knows who's going to be the social media leader in 10 years, right? I mean, back in the day we had MySpace and everyone thought MySpace was great, and it just, I think this company it kind of ticks off all those boxes where it's just basic needs. And basic needs companies, they might not be as exciting or sexy as a Facebook or Google, but you know that they're probably going to be here in the future. So this is one of the reasons why I really like Uber. So guys, thanks for watching my video. I think it's about time to cut it off now. I'm really looking forward to reading the next quarterly report. I'll be updating and sharing you guys my thoughts about Uber. $47 billion market cap for a company that I would consider in the realms of Facebook, Amazon, Google. All of those companies are trading well over 400, 500 billion, sometimes even a trillion. So, I mean, I just think you're getting this company at a steal. So that's it for now, guys. Also, I got a free promo for you guys. You get a free share of stock through Robinhood and Webull if you just sign up using the links below. I use both of these accounts. I like Webull and Robinhood for different things. I like Robinhood, very easy to research stocks and things like that. And for you guys that are out there that are more into technical analysis, if you're into day trading and swing trading, things like that, then go check out Webull. So just check out the links in the description box and get your free share of stock, guys. Thanks for watching, and let me know what you think about Uber in the comments. I know a lot of people say they're not profitable. I know a lot of people say, oh, there's too much negative news, but $16 billion in revenue to a company that's basically getting all the hate in the world. I just think, what's going to happen when people are positive about Uber? And once again, CEO insider buying, very bullish signal. So that's it for now, guys. Let me know what you think about Uber in the comments. And until next time, take care.